Hi everyone, in this video I'm talking about bank accounts, how many you need and what's the best way to set them up. If we haven't met before, my name is Angela. I am your money messenger. My background is in financial planning. I help financial advisors to put together recommendations for their clients that teach strategies on how to repay debt, invest money, and grow wealth. I'm also an investor myself. Everything I teach you in these videos, I do myself, so I know it works. In this video, we're talking about bank accounts, how many you need, and what's the best way to set them up. So let's get started. More often than not, I still see a lot of people that have just one bank account, particularly if they're younger. Now, the problem with having just one bank account is that all of your money is mixed up. Your savings, your spending, everything. It's harder to know what's meant to be money to spend and what's meant to be money that you're meant to save. If everything's all mixed up, it's harder to track how much have you saved one month to the next. And your money is too accessible. That means if it's all clumped together with your ATM card, you've just got free rein on it. So it's really hard to get ahead and know if you are saving anything at all. My money philosophy revolves around separating money. Separating for different purposes, whether it's for spending, for saving, and even with savings, are they for shorter term or long term? For me, it's always worked well to manage my money by separating it. Some of it out of sight for longer term savings and some of it closer to me, but in different bank accounts for different purposes. Now, I don't mean having 10 or 20 bank accounts, but you need to have at least two, preferably a few more, and I'll get into that a little bit later. Having a second bank account is critical. Your first bank account should be your everyday transaction account, which has a little bit of money in there to keep you afloat for your day-to-day transactions and bits and pieces. Your second bank account, which you must have, is for your savings. You have to separate your savings. Otherwise, it's hard to know if you're progressing, to know if you've saved any additional money to that account. And it's also harder to get it away from eyesight, so you're not tempted to spend it. So the absolute minimum number of bank accounts that you must have is two. However, I think you need a few more. For me personally, 5 bank accounts works best. Number 1 is my everyday savings account. That's where my money is deposited into and all my day-to-day transactions comes out of. The second account is for my savings. Now, I'm a huge believer in having that bank account with a different institution to your everyday bank account. Your savings account should be out of eyesight, out of mind, and somewhere that you don't see it often and you can't access it with an ATM card. So 2 bank accounts is the absolute minimum number that you have to have. However, to have ease of cash flow management for your everyday money, I do believe adding on a couple extra bank accounts is ideal. I'm a big believer in segregating my money, having it for different purposes, different buckets, different pockets, if you will, which then limits the amount of money that I leave in my everyday bank account and accidentally gets spent on life. So my number 3 bank account is the bills account. This is where I put a fixed amount of money every month or every week, every fortnight, whenever you're paid. For me, I pay myself monthly in my business. So every month I put a certain amount in there, which covers all my fixed bills, my regular bills, whether it's phone, gas, rent, mortgage, it might be, gym memberships, subscriptions, anything that's pretty much the same amount all the time. Even if it varies by a few dollars, it doesn't matter. It all washes out in the end. But all my fixed regular bills, as many of them as possible, I put together into this bank account. I work out the annual amount that all costs me, divided by 12 for 12 months, and I put that amount into my bills account to cover them so that I never have to worry about fixing up a bill. I never have to worry about having the money because I know that it's always there. Having a bills account also lets me take advantage of paying bills annually instead of monthly, which quite often can make them cheaper. I just use the money that's in my bills account because I know that's been earmarked for bills and bills only. I don't touch it for anything else. Number 4 bank account is an emergency bank account. This is savings for at least 1 month's worth of your expenses. This is in case you get hurt, can't go to work, you lose your job, an absolute essential crisis happens. You need to have some emergency cash. Minimum is 1 month's worth of expenses. Ideally though, in financial planning, 3 to 6 months worth of expenses should be kept in cash in that bank account. Now, depending on how good you are at earmarking money for certain reasons, you might want to consolidate that money with the rest of your long-term savings that are held with the other banking institution. It's up to you. But if you need to keep things separate, especially whilst you're getting your head around establishing an emergency account for yourself so that you know how much is in there, then I really suggest that that be a separate bank account. That's your number 4 bank account. And for the last bank account, number 5, I call it the just in case account. We are here to enjoy life. We only get one shot at it. And I don't believe in missing out in what you want just because you can't afford it. I do believe that a lot of people can afford more than what they think they can in life if they have savings and their cash flow in check. So for me, I have a just in case account. Usually I use it for travel. That is what I love, what I live for, what I work for. So it's my travel account. That's what I've actually named it. For me, I put a regular amount in there every time I'm paid. That goes towards my travel for the year. If it's not travel that you're into, replace that with anything else that floats your boat. Perhaps it's more you're into clothes or your tech gadgets or whatnot. That is the bank account that you regularly save to, even if you don't even know what you're saving for. Something will pop up in life, it always does. So there needs to be an amount of money going in that account every single month, no matter, so that when you see something you want, you know that you can go and get it straight away. You don't just then have to think about how I'm going to save for that purchase. You already will have the money in there. So that's exactly how I set up my bank accounts. I have 5 bank accounts. I have 4 of them with my normal everyday bank, and then I have 1 with a different institution that I can't see. That's used for my longer term savings. For the other accounts that I'm using, that I'm going to be dipping into, like my bills account, like my everyday account, those I'm just using regular bank accounts for those because it's not really worth time and effort chasing great interest rates for everyday accounts. Most banks pay nominal interest, if anything, so it's not really worth mucking around. But for longer term money that you won't be touching, such as my savings, that's held with a different banking institution, so I can't easily see it. And you have 2 options when it comes to that. You either pick a high interest bank account, which will pay you a higher interest rate than a run-of-the-mill bank account. Or if you have a home loan, you might want to consider an offset account. An offset account sits attached to your home loan, and for every dollar you have in that offset account, it essentially reduces your loan balance that the bank uses to calculate how much interest you have to pay. So if you have, for example, a $300,000 home loan, if you have $10,000 in your offset account, the loan balance will be $290,000 that the bank will use to charge your interest on. That can save you a lot of money when it comes to a home loan, especially if you have your savings in an offset account for a long period of time. And over the 30 years that it takes on average to repay a home loan, that can save you thousands of dollars in interest and actually help you to repay your home loan faster. So speak to your lender about an offset account if you have a home loan. If you want to know more about this, I have written a book called The Money Messenger. In it, I detail all my financial secrets and strategies on how to repay debt, increase your wealth, invest money, insure yourself correctly, all sorts of aspects of finance, including bank accounts, what we spoke about today. It's on page 74. You'll find it in all sorts of detail. I even have graphs in there to show you exactly how I've set up my own bank accounts and how you too can do the same for yourself so that you can simplify your money management, you can automate your bills and your savings so you can set and forget and move on and enjoy life. So if you want to find out more about that book, please check out moneymessenger.com.au. If you like what you watched today and got value out of it, please don't forget to subscribe, give me a thumbs up, and let me know what you thought about this video in the box below. If you think you have friends or family that would get good information from these videos, I would love you to share them around with them. If you've got any questions about money, I'm happy to do a video for you as well. So let me know what you want to hear. I'm here to help you. I'm here to make you financially fluent. I want you to be able to control your money and live the life you want. Stay tuned. I'll be posting regular videos each week and I will see you next week. Thanks everyone. Bye.